Hi, this is Kerry Artag with Wicked Stocks, bringing you the daily Apple report for Thursday, November 2nd, 2023. But before I walk you through the charts, as usual, just want to encourage you to please click like if you haven't already, subscribe to the Wicked Stocks YouTube channel, share the content if you would with friends and colleagues, and check out wickedstocks.com, where we offer a full suite of both daily and weekly analytical videos just like this one. Daily analysis in the SPY and the Triple Q, that is the S&P 500 and NASDAQ 100 ETFs. Weekly analysis in the S&P 500 Index, the NASDAQ 100 Index, the Long Bond ETF, the TLT, as well as 2 individual stock picks a week that you never see on YouTube. That is 8 a month that cater to the 3 to 5 week swing trader out to the 3 to 5 month near-term investor. We're always looking for at least 20% moves on those stock picks, and you can check out all of this for no cost for 5 days. We offer a 5-day free trial up front with a wickedstocks.com subscription. So sign up for wickedstocks.com, check it all out. If you don't like what you see within 5 days, you can cancel your subscription at no cost to you whatsoever. Let's jump to the charts. Before I do, actually, I keep forgetting to mention that just recently, this last week, 3 different stock pick videos that you might want to check out. NetEase, Alphabet, and Cisco all are very relevant right now, and you can see them for free by taking advantage of that 5-day free trial through wickedstocks.com. On with the charts, big picture, work our way into the day itself. Just a reminder, we did once again come off long-term support very recently last week, 165.57 to 166.99, above which the 187.38 formation likely by the end of the year or sooner. Could be sooner. I'll get to that in a moment. And in fact, the low 200 area is a longer-term target. By this point next year or sooner, that sooner would come with a settlement above the 187.38 formation. Until then, we could top out at 187.38 through the rest of the year, into the first quarter, fall back into the mid-160s, fill this wedge out for a couple more months before presumably closing above this formation, which would then signal, I think, a protracted rally up into the low 200 to 230.13 area. This, as time goes by, it becomes kind of a 5 to 8 month possibility. But right now, if it were to occur in the next few weeks, I'd say 3 to 5 months, we could, by the end of Q1, reach 230.13. Downside, and I'll just sort of cut to the chase here, if we were to close tomorrow, the week itself, below 165.57, and yes, that long-term line study does need to be by a 1% margin of 163.91 or lower. This market heads south. 3 to 5 months later, I would expect the low 130s, 132.39. We're not there yet. I don't anticipate seeing the low 130s unless we close below 165.57. Until then, just want to reemphasize that I am bullish through the rest of the year into the upper 180s and through next year into the 230s and higher. So let's get to the day itself. I'm trying to figure out where to begin, and I will begin with this image here. This channel top, we settled above 173.40, able to contain intraday selling pressures, assuming we open above it, and above which the 174.96 speed line in reach today. Now, that was considered a bit of a 1 to 2 week target following the test of the mid 160s. Was that this week? No, it was last Friday, Monday. No, it was last Thursday, Friday, man. Yeah, it was last Thursday we actually tested, and Friday again tested this mid 160s long-term support. Following the test I'd mentioned, 1 to 2 weeks, 174.96. We're likely to test that today. If you got long in the mid 160s and you're a 3 to 5 day, 1 to 2 week swing trader, this is your profit-taking area, because we could top out at 174.96 back into the mid 160s again by the end of next week, perhaps. So keep that in mind. This is sort of your 3 to 5 day, 1 to 2 week swing trade. Buying the mid 160s, selling the mid 170s, buying the 160s, selling once again this speed line. Now, I am anticipating, as I mentioned earlier, the upper 180s, 186.61 on the daily chart as a 1 to 2 month target. And so closing above 174.96 is considered an eventuality. Whether that's today or, mid-November is anybody's guess. And if we close above 174.96, this could be a 2 to 3 week move into the 186.61 region, where we could top out perhaps through the rest of the year. Now, I will also say that if we close above 174.96, and I'm talking to 3 to 5 day swing traders, go long to 180.88. So 3 to 5 day swing traders right now are taking profits, presumably off of this mid 160s test, and perhaps going short in anticipation, once again, of the mid 160s long-term support. But if we close today above 174.96, 3 to 5 day swing traders go long, stay long to 180.88, where we can top out on a daily basis, possibly longer than that. We could fall back from 188 down to 174.96 within 3 to 5 days of testing 180.88. And I'll be talking a lot about that if we approach the 188 formation. But bottom line, closing today above 174.96 does signal 180.88 within 3 to 5 days. As I mentioned earlier, over the next several weeks, 186.61. So, if you are a 3 to 5 week, 2 to 3 week swing trader, well, you may have been bottom picking the mid 160s anyway in anticipation of the mid to upper 180s. And if we close today above 174.96, you're staying long in anticipation of 2 to 3 week rally to 186.61. So if you've not, though, entered a long position when we tested long-term support last week in the mid 160s, if you've not gotten long yet, your next opportunity would be a settlement above 174.96. And I would expect about a $10 rally, this 186.61 formation dropping daily. Once again, on the weekly chart, it comes in at 187.38. And that zone is an area where you would then take profits. If we were to close above 174.96 today, you would take profits in the mid 180s by that point in time, and perhaps then even go short through the rest of the year. And once again, we'll be covering that very closely on a day-to-day basis with the Daily Apple Report. We'll stay with this chart talking downside today, that if we do break or open perhaps below 173.40, 170.96 in reach. Now, this is a very short-term channel bottom, can contain session weakness. It is so short-term that I really don't like to overemphasize them, but I will say it is correlated. It's not far off the mark, say, of Wednesday's low. There's this high area. There's all kinds of stuff going on in the 170 handle, I guess is what I'm trying to say. And I think, simply put, if we close today below 170.96, with that kind of volatility, I think tomorrow we retest 165.57 to 166.99, where once again we can bottom out through the rest of the year. And above which, once again, this upper 180s remains a 1 to 2 month target. Make that 2 to 3 weeks with a settlement today above 174.96. Once again, I'll just reemphasize 170.96, solid support for the day, and we could bounce nicely from here back to 174.96 within a day or so by tomorrow. So that is kind of like your this is kind of your 1 to 2 day dynamic, buying 179.6, selling 174.96, and if we close once again below 170.96, that does aggressively pivot the market south tomorrow into this mid 160s. And we'll see where we settle the week out right now. Right now, it looks pretty favorable. But once again, if we close below 165.57 by that 1% margin, we do continue south, in my opinion, all the way back to this low 130s, a long-term support within about 3 to 5 months. I'm going to leave you with this chart for the day, the most appropriate one. I think that's all that needs to be said. Please click like, share, subscribe. Check out that Alphabet, Cisco, and NetEase analysis over the last week by going to wickedstocks.com. You have a great day.